Everyone, this is Yasir, and now I'm going to explain about what is pair trading. So, pair trading is a market entry strategy that involves creating a portfolio of two correlated assets, one long and one short. The goal is to exploit temporary price divergence while minimizing overall market risk. The foundation for this pair trading is the concept of mean reversion, which we expect asset price to eventually return to a long-term equilibrium. Traditionally, pairs were selected based on trial and error, often grouping stocks from similar sectors. However, with a large universe of stocks, this manual selection method is efficient and challenging. This is where clustering comes, another data-driven approach to efficiently identify suitable pairs. So let us understand how pair trading works with a case study. So in this case study, our objective is to leverage clustering technique to select pairs of stock from S&P 500 for the pair trading strategy. To start with, we have gathered a historical stock price down data from Yahoo Finance covering 2018 onwards. After loading the necessary Python libraries for data processing and clustering, we prepared the data by addressing missing values and calculating key metrics like annual returns and volatility. Next, we applied three different clustering algorithms, which are k-means, hierarchical clustering, and definitive propagation, to organize stocks into groups based on their historical returns and volatility. For k-means, we used LO and slot methods to find optimal number of clusters. For hierarchical was visualized through dendrograms, and affinity propagation, on the other hand, automatically determined 27 clusters and yielded the best slot scores, indicating the most well-defined clusters among the methods tested. So these are the outputs. Now, once the clusters were formed, we moved on the Cointegration testing to identify strong stock pairs within each cluster. Cointegration is statistical property that suggests two time series like stock prices move together over time, even if they are non-stationary individuals. Using the augmented test, we tested stocks within each cluster, identifying 32 stock pairs across 47 unique. Uh, which is how we got to a conclusion about it. Now, to ensure clustering quality, we visualize the clusters using scatter plots and TSNE, a technique for higher dimensional data visualization. Each cluster was color coded to display distinct groups, and scatter plots reveal consistent stock movements within the cluster, as you can see in the image. As we have provided four different graphs visualizing stocks in different ways. And in conclusion, this technique provides an efficient method for identifying stock pairs for page trading. This approach narrows down potentially pairs by grouping stocks based on performance and volatility, enhancing the precision of the selection process. Moving further, we can uh, uh, we can perform backtesting of various long-short trading strategies using this pairs to yield insights into probability. Additionally, clustering could extend beyond pair trading, aiding in portfolio diversification and risk management by grouping stocks with similar characteristics. I hope you understood the concept of pair trading. Now, let us go with the demo how it can be performed in an virtual environment. Let us go through the demo of page trading. For the initial, we have imported the necessary libraries and model packages, which would be useful for us to render this thing. Now we have rendered the CSV file. Now we are using SP500 data .csv, which we have downloaded from Yahoo Finance. Now we reprocess the data, we analyze the shape, take a peek at it, and describe the data. Now to perform much efficient error handling, we check for null values and fill the missing values if any available, and calculate the returns and volatility from the provided data. Our aim now we have visualized like this. Our aim now is to perform three clustering techniques, which is k-means, hierarchical, and affinity. So after performing k-means, we get a cluster like this, and as you can see, there have been obtained six clusters of different proportions, and find each individual cluster is diversified to unique features. For hierarchy, we have got a dendrogram for the provided stocks and the cluster basing on it. And we also calculate the affinity, which is volatility versus mean return. To much further understand the estimated number of clusters, we visualize it in this way, and we count the cluster members. Now we visualize it for the quantification of the particular stocks over a period of time. As you can see, these are different graphs representing different stocks over a period of time in different clusters. After performing it, we obtain a number, we obtain the pairs, as we obtain the pairs, we found there are 32 pairs in which 47 are unique tickers, and these particulars are the pairs which we have obtained after processing the data and applying the technique. Now we represent this pairs in a particular TSCV visualization, which consists of the validated pairs which we have obtained. This can be further utilized in backtest of long short trading strategies based on selected pairs, and can be and this method can be explored. We can explore the clustering for broader applications like portfolio diversification. So I think now you have understood the concept of pair trading. Thank you.